All right, so chapter 3. We're going to work on adjusting entries in this chapter. I'm going to let you pause the video and read this problem so I don't read the problem and make it a real long video. So you read the problem, right? And you know we need to do adjusting entries. Well, the first one is letter A, and it says depreciation on the company's equipment for the year is $18,000. Now they told us what the dollar amount is for depreciation. Later in this course we'll calculate depreciation, but for right now we're going to give that to you. Second point on this, there was a video before this one and I said never expense a building or equipment, a car, whatever, an asset when you buy it. We'll expense it, but we're going to expense it over time. Not when we purchase it. Okay, so here we go. Here's how we do it. We depreciate, we expense the asset over time through depreciation. So part of the asset, the equipment costs a lot more than $18,000. How much? Didn't give it to us. Don't care right now. It's not the point. The point is it costs a lot more than $18,000. But this year's expense of that equipment, the depreciation is $18,000. So we debit depreciation expense and we credit accumulated depreciation, both for $18,000. Prepaid insurance had a $6,000 balance on December 31st before adjusting for the cost of any expired insurance. An analysis of the company's insurance policy showed that the $1,100 of unexpired insurance remains. Okay, so on December 31st, we're looking at the prepaid insurance account. That's a P and a P. That's a D. Whew, it's awful. And that's a T account. So we're looking at a $6,000 balance on the last day of the year. And we look at the records on it and we still have about $1,100 in prepaid insurance yet. And that balance is what it should be, but it's $6,000. So we have to get the balance in prepaid insurance down. I had to get it down from $6,000 down to $1,100, and the only way to do that, the difference between these two numbers is $4,900, and the only way to do that is with a credit. Okay, so I have to credit prepaid insurance for $4,900, and when we do that, $6,000 minus $4,900 is $1,100. It will be a balance of $1,100, which is what we want it to be. So let's look at it from another angle. You're reading the problem, and it says, okay, we're $6,000. But we've done some work and the unexpired amount's $1,100. Well, that's the fancy talk for saying that's the balance, should be the balance in prepaid insurance. That means we've used up, consumed of $4,900 of the $6,000. So this is the expired part. Personally, just don't like that, but the way it's worded, but that's the way it is. So it's expired, it's consumed, it's used up, it's gone. And we only have $1,100 more for that prepaid insurance before we have to start writing the insurance company a check. So debit insurance expense, $4,900, and credit prepaid insurance, $4,900. Letter C, the supplies account had a debit balance $700 at the beginning of the year, so like say January 1st. And then during the year, we bought $34.80 in supplies. Then at the last day of the year, somebody goes to the supplies closet, does an inventory, and says, aha, we got $300 left. And they give this information to you, and they say, create a journal entry. And you will. Let's talk about that journal entry. Let's tidy up a little bit. And let's create some room. All right, so sorry about that. So we got supplies. I can't even draw a straight line with a mouse. So we have supplies. and it said we started the year with 700. Remember, supplies is an asset, so it's got a debit balance. The normal balance is a debit. And then we added 34, so the normal balance is debit, so that's how we increase it, is through a debit. And at the end of the year, we have a $300 balance. So we have a balance at the end of the year of 300. We start off the year at 700. That means the only way to lower a balance in an asset account that has a normal debit balance is a credit. And that's the question, right? How much do we need to do that? So what you do is you add 700 and 3480. So you add those two together. I'm doing it on my calculator. You get 4180. All right, and we want whatever we subtract, we want it to equal 300. So all you got to do is subtract 300, and you'll get 3880. All right, so you want to check your work. So what you do is you do 700 plus 3480, just like it says here. Then subtract 3880. 3880. And you get 300. So you check your work. You want to make sure you get it right. So A was given to us. B, we did some work and it wasn't that bad. C, that's probably the most work we'll do in this chapter for an adjusting entry item. I've been teaching principles classes for a while, and this is the one you got to be careful with. So if you have any questions still, or you want to email me or whatever, let me know if I can help you, okay? But you just got to keep plugging away and practicing too. And I think the way I'm doing this, it makes it so much easier to calculate the 3888 with the plug-in method here. When I say plug-in, I mean this right there. You know, box, whatever you want to do, and then you solve for that missing number. Kind of like basic algebra. Anyway, let's look at the entry. So we debit supplies expense for 3888, the number we just calculated, and then we credit supplies 3880. So that right there is the 3880 for supplies, and then obviously it's a debit supplies expense. All right. D, 2/3 of the work related to $15,000 cash has already been received in advance, was performed this period. So you can be paid by your customer up front, early, before you've earned the right to say, hey, I performed a service and I want to record that as revenue. So most of the time that happens, and you perform a service and you're not paid, so you debit accounts receivable. Let me just write that out. You debit accounts receivable, and that's AR, and you credit revenue, right? And I'll abbreviate revenue. So that's the most common form that you think of when, you know, revenue and cash aren't synced up and you're recording revenue without cash, right? But there is a weird one where you can get to cash first before you can record revenue, and that's you would call it unearned. Let's do this. Let me leave more room. So you would debit cash because you got the money up front. Let's say you got, we'll do this one for the problem. So a while ago, whenever that was, in letter D, they were paid $15,000, and they debited cash correctly to record the receipt of the money, and they debit an account called unearned revenue, also for $15,000. Now, unearned revenue is a liability. We talked about that in a prior video. So unearned revenue is in this account, right, or account list right here in the problem. So this is what happened before we did the adjusted entry. And they're looking through the accounts and they're like, you know, wow, we got paid on this. You know, why is it still showing $15,000 in unearned revenue? We need to fix that, because we did a good chunk of the work. What did it say they did? Oh, 2/3, right? And 2/3 of 15,000 is $10,000. So they've done $10,000 worth of work. So the balance in unearned should not be $15,000. This should be lower. So this is what they're saying happened. So unearned revenue, I'm going to abbreviate that, was $15,000. And what they did was they said, look, you know, we should be able to count 10,000 of that. Again, they already have the cash, but they can't count it as revenue. We should be able to count 10,000 of that as revenue. And if we do, that means unearned. We still got to do some work. We got to do about a third of the work yet. We should be able to count 10,000 of that as revenue. So they'll debit unearned revenue and they'll credit revenue for that 10. Again, they've already been paid. We just never did book it in as income until the work was done. All right. So revenue will be credited for 10,000 and unearned revenue will be debited for 10,000. So debit unearned revenue 10,000, credit service revenue 10,000. I think after this they're all going to be pretty easy. We're on E now. Prepaid rent had a balance of $6,800 at December 31st before adjusting. An analysis of the rental agreement showed $5,800 prepaid rent had expired. There's that word again, expired. But I mean, it's just been consumed, it's used up. That's your expense. No extra math. Yes, I love it. Prepaid expense $5,800. I think I just said something crazy. Rent expense $5,800. Debit, credit, prepaid rent $5,800. And one last one. I think we're going to have a little math for this one, so I'm going to clean up my work area here. Let's get this all cleaned up. Sometimes it's, you can get your cursor right on it. It's faster just to do this. All right, so wages. It'll take a minute to. Oh no! That's the next problem. I was thinking we had to do a lot of math for that, but that's the very next problem we're going to work. So wages are $3,200 have been incurred but not paid. So that's super easy. Wage expense $3,200, wages payable $3,200. It could be like the end of the year. Payday's like January 3rd, right? And wages through December 31st. You know, that's going to be paid on January 3rd. Haven't been recorded yet. We want wages for last year and last year. We want wages for this year and this year as far as expenses go. So we debit wages expense $3,200 and we credit wages payable for $3,200. So again, this way we've got the expense in the current year. And what we're saying is, you know, it's not time to pay the people yet. Their payday is January 3rd, which is next year. We'll pay them on January 3rd. We're not going to pay them a little bit right on December 31st and then a little bit on January 3rd. Now, you're going to get the full regular check on January 3rd. It's just that the company went ahead and booked it as an expense on $3,200. In this case, $3,200 in the prior year, or the year ending December 31st. And then let's say there's we'll look at a different problem and it'll explain it better in a minute. Actually, let's see if we can get it done before my self-imposed 15-minute deadline. So read the problem and then pause, read the problem, and start playing again. So wages expense, so $250 a day for 5 employees. 1 day would be $1,250. So prepare a journal entry for December 31st. That's just 1 day's expense. So we'll debit wages expense $1,250 and we'll debit wages payable $1,250. So I think I paused the video and didn't say I was going to pause it, and I drew a timeline. So Monday's December 31st. We recorded the expense for that, and that means it's a new year, starting on Tuesday. And according to the problem, they don't get paid. They don't work, and they don't get paid on Tuesday. So they'll be paid on Friday for these 3 days plus last year's Monday, right? So that means they're going to get paid for 4 days on Friday. Well, we've already recorded the 31st as an expense. So we need 3 days worth more yet. All right, so let's look at that. So wages expense that we're going to record for these 3 days. So $1,250 times 3. Boy, that's not good. That's $1,250. I'm sorry, y'all. Equals $3,750. All right. And I'll start another video in a second.